Absolute wealth. Real investors, real results.
Hey everybody, this is John Carter, and let's take a look at what happened today. And there's two main things to look at. The first, of course, is just the overall stock market with the spiders and how do they do. So you've got a situation here where the waves continue to point, the trend continues to point up. Momentum on the squeeze is heading lower, meaning that if this triggers in the next couple of days, that could be end up being a short squeeze. And of course, you can know that a long squeeze results in prices going higher, and if this triggered short, then we'd see price. Look for price to go to that 55 period moving average. So far, the spiders continue to hold that 21 period moving average very, very well, and at this point, they're trying to do that here. Now, if we go and look at the Russell, it's a slightly different story. The Russell has actually already broken down and tested that 55 period moving average. And then if we look at the Qs, they're kind of right in the middle. The Qs did not bounce off of the 21, but they've bounced back to the 21, and you've got a similar situation here to see which way that's going to go. All right. Now the real story is the yen. So you can see here this this chart of FXY, which is the yen, doesn't really do it justice because it doesn't show the overnight selling. So let's go ahead and look at the Forex pair. Of course, this is inverse. So you can see what happened here is the Bank of Japan came out last night and just said, hey, you know what? The quantitative easing we're doing isn't enough. We're going to do more. And this chart is the inverse. So if this chart is going higher, it means the yen is getting weaker against the dollar. And you can see it just exploded up. It was up over 3%. This chart was up over 3% today, meaning that the Japanese yen weakened against the US dollar. Now, what's been happening in the past is that as the Japanese yen gets weaker, the US stock market goes higher. But today, that did not happen. Now, while the Nikkei, the Japanese stock market, was up 6%, the US market was fairly flat. In fact, if we go back and we look at the spiders today, you'll see that they were up 63 cents, so 0.41%. So very, considering, I mean, with the way these relationships have been working, I would have expected with the yen down that much for the S&Ps to be up like 25 points today, or $2.50 on the spiders. So that was actually I would consider bad news for stocks, meaning that they did not respond to that. And honestly, it shows that the problems in the world right now are a lot bigger than people think, because the Japanese government is getting that desperate to stave off deflation. They're actually doing more quantitative easing right now compared to their GDP. They're doing way more than the United States. And that's why the US dollar continues to be strong, because, and you can see here, it popped up early today and then kind of settled. But it continues to uptrend like this because the US dollar is getting stronger against most other currencies. All right, so you got a lot of different dynamics there. All right, so a couple of positions, a couple of stocks. Texas Instruments. Now we did have a squeeze here. It triggered short. It did hold that 55 period moving average, so I want to see now if it can actually retake it. And right now the markets are on the cusp. Like the trend of the markets is higher. So we're going to see if this test of the 55 period moving average is going to hold, and if the employment numbers that come out are going to help that to go higher. And then looking at Somatic, we've got a nice squeeze setting up here, and looking to see if after this consolidation we can continue higher from there. All right. And let's see, last but not least, oh yes, I want to look at the bond market. Also, you can look at this through TLT. So you can see here, TLT has been exploding higher here. And on a daily chart, if we go back, you can see where the high here is 132. It's not quite indicative of what T-notes are doing. If you come back here and look at the 10-year note, you can see that we're not that far off the highs, only 3 points. And if 10-year notes take out that high, which is an all-time high, things could get very, very interesting very quickly, meaning that the global economic situation could unravel. All right, so just kind of keep that in mind. So, yep, the headlines right now are fantastic. Stock market at all-time highs. But what's happening is there's an undercurrents of economic weakness that are starting to creep their way through. This is most evident by what's going on in the copper market, which is a good measure of supply and demand, and you can see we keep continuing to sell off here, doing weaker demand. This stuff comes out in economic reports 30 to 60 days later, and we may see this reflected in the non-farm payrolls on Friday. All right, so just beware. The stock market at this point is showing signs that it's ready for a 4 to 6 week retracement, and signs around the economy are starting to look a little iffy. Just be careful on the long side. You can buy protection in the form of puts on spiders, or of course, as a more aggressive trader, just focus on the short side. All right, you guys have a great night, and we'll see you at the next update.